Welcome to the ABCs of Transforming Technology Companies. Today's session of the Rutgers Business School Signature Leadership Series. Today's webinar is offered in valued partnership with Tech United NJ, previously known as the Tech Council of New Jersey. Tech United NJ empowers innovators, entrepreneurs, and instigators, and we thank them for their support. The Rutgers Business School Signature Leadership Series is a relatively new learning opportunity that brings our audience lessons of resilience, resourcefulness, responsibility, and reinvention through conversations with thought leaders and business leaders from across industry spectrums. I'd like to start by telling you a little bit about our moderator before handing things off to today's presenter. Bob Azman is Chief Customer Officer and Customer Experience Consultant at Innovative CX Solutions. His background includes a wealth of diverse general operations and business experience from his time as an executive at several large corporations where he managed global customer service, technical support, software implementation, and training and development functions in the US as well as internationally. Bob provides a unique perspective on helping companies become easy to do business with. He teaches at the University of Minnesota and guest lectures at the University of St. Thomas Opus School of Business. Bob is also an integral part of the Rutgers Business School Executive Education faculty, particularly in our mini MBA Customer-Centric Management. Bob will lead the discussion that follows our formal presentation. Now it's my pleasure to introduce our presenter. Oleg Khaykin joined Viavi in February 2016 as president and CEO, bringing more than 28 years of industry experience. Prior to joining Viavi, Mr. Khaykin was a senior advisor with Silver Lake Partners. Before that, he was president and CEO of International Rectifier from 2008 until its acquisition by Infineon AG in January of 2015. He's also served as the Chief Operating Officer of Amkor Technology and Vice President of Strategy and Business Development at Conexant Systems. Earlier in his career, he spent 8 years with the Boston Consulting Group, and prior to that, he was an engineer at Motorola. Mr. Khaykin holds an MBA from Kellogg School of Management at Northwestern University, go Big Ten, and a BS in Electrical and Computer Engineering with honors from Carnegie-Mellon University. I'll hand things over to you, Oleg, so you can take it from here.
Thank you very much, and good morning to those of you on the kind of western part of the U.S., and good afternoon to those of you on the East Coast. It is my pleasure to be here, and I'd like to obviously start off sharing a bit of my perspective and experience in the technology industry. Thanks to Margaret's great introduction. She already pretty much covered my bio, so I'm not going to dwell on it. But I would just say, in the last 35 years, I've been pretty much everything in the technology industry, starting with the entry-level engineer to being a CEO, COO of 3 technology companies. One thing they all had in common is when I joined them, they were all in very bad shape. And so in some ways, my reputation developed as the Mr. Fix-It. And, fixing technology companies is not trivial. The first thing you got to do is to see if there is any, first thing about technology companies is their technology. So if technology is at least as good as the competitors or better, then you've got great probability of success, because then it's really fixing the business model, the organization, the incentives, and things like that. If the technology company doesn't have technology, then the challenge is significantly greater, because in the tech world, if you skip one technology cycle, it becomes very difficult to recover, and usually that's where a lot of technology companies die very quickly. And in fact, if you really look at the technology leaders 25 years ago, 20 years ago, many of these companies are gone today because for one reason or another, they slipped up or missed a cycle, and it's a very unforgiving space. But 5 years ago, I joined a company called Viavi. It's actually it's a new name for a company which is with a very long history. For those of you who may be familiar with the optical space and network communication, it used to be called JDS Uniphase. And it's an interesting thing because JDS Uniphase during the last optical bubble, 99-2000, was worth close to $150 billion of valuation. And it was on a sales of under $2 billion in revenue. Obviously, when the bubble popped, the company, saw its valuation drop. But more importantly, it lost its way and increasingly became a sick man of the industry. And it attracted a lot of activist attention. And in 2015, the company decided to break itself into two, with the network test and management equipment and optical security being called Viavi, and all the semiconductor components and module became a company called Lumentum. So I was approached at that time to take over the company and help it turn around, because that was the ugly part of the business, the most challenging one. And I will talk about what we said in the transformation. When I looked at it, I looked for opportunities within the company. Do they have, first and foremost, do they have any interesting technology or differentiation? And that passed my initial test. And the rest was very easy, because then you just basically come in and you have to restructure. And I'll talk about strategy and doing it. I did a similar thing with International Rectifier. The company ran into major problems. They had a financial scandal. They were cooking books for 5 years. It was a strategy that wasn't working, but they just kept pushing. And eventually, the company got in a situation where the senior management started doing engineering financial results rather than achieving them. And there, it was a similar story. The strategy was broken, but the technology was very solid in the company, and it just needed to be reoriented, restructured. And it was a big success story. It went from being nearly dead to being a market leader in the power management, and was acquired by at a significant premium by a much bigger competitor. And prior to that, I was in Amkor technology. It was outsourced manufacturing for semiconductor industry. It's a company based in Phoenix with factories all over Asia. And prior to that, so basically, I spent most of my time in the semiconductor and telecommunication industry. With that, I'll go to the next step, to talk about the company. So what is Viavi today? Well, if you look at Viavi today, it's a significant difference from Viavi just 5 years ago. We're number one in every market segment where we compete. We have two major segments. It's test and measurement, where you provide instrumentation and software to various customers, cable operators, telecom operators, wireless operators, the fiber optic network managers, and also in military and aerospace, avionics testing, and military and public safety communication. In the security space, we are a number one manufacturer in space in that space for anti-counterfeiting products that go into over 400 currency denominations in about 140 countries. And we do advanced optical filters and diffusers that go from anything that's facial recognition in your iPhone to deep space probes that look at optical for the advanced optics in the satellites and deep space probe vehicles. So, when I looked at Viavi, I saw the potential, I saw the differentiated technology. And what I came to a realization, as often happens with a lot of very good, successful technologies, they fail to see the transitions in their markets, and they fail to capitalize, and they fall behind, or they were very comfortable with what things were working and what was great, and when they had a really high valuation, and they just keep doing it and keep doing it, or the management tried to be something that they are not, and they neglect their products and technologies, and they want to become something sexier. As I say, grass is always greener on the other side, without understanding whether they have competencies or not. When I came to Viavi, I took about 6 months to really understand thoroughly what is good, what is bad, and what is ugly, and what is savable, what is potentially savable and recoverable, and what needs to be jettisoned. So when I joined, one of the things we did, let's see here, is I'm just going to give you an idea of what we were facing. So in 2015, the company had two businesses: the NSE, which is network and service enablement, and that is basically a test and measurement business for telecommunication and data communications. And the optical security products, which is the OSP, was about 193. As you can see, the OSP was very profitable. It was basically accounting for over 100% of company profit. And NSE actually, in truth, was losing money, and there was a lot of reallocation to make it look at least break even. But in truth, it was actually hugely negative. So net, the OSP was more attractive than people thought, and NSE was uglier. Where we are today, finishing fiscal 20, which was last year. Actually, this year results are even better, but we haven't announced them. Even with COVID and all that, the revenue was up about 30%. Our operating profit was up 210%, and operating margins expanded close to 11%. And really, the spectacular recovery was really on the NSC side, changing the business model and restructuring the business, and really putting pedal to the metal to grow the OSP business unit, growing from 193 to $287 million. And this year we closed well north of $300 million in net business. And you can see, particularly on the EPS, I mean, that is a huge recovery story. So how did we get to it? Well, you got to put the right strategy. So we set an objective. There's really no rocket science here, but it's almost the same strategy you can take to any company. But what's importantly is what you actually do within these 4 points. So first of all, you say we got to be number one, or at least a strong number two. If unless we see a path to being number one or strong number two in the industry, probably not worth your time spending money and investing in those segments, because you will never be better than your competitors, and you will always be saddled with high cost and subpar profitability. And then you say, once you say that's your general objective, and everybody knows it's nothing new here. It was the old GE model, and it's kind of the truism in the industry. Then you say, well, how do you get there? Well, the first one, and I would say that's a very important point, because a lot of CEOs and a lot of leaders in the industry completely forget it. And it's defend and expand your base. Everybody wants to chase the growth, and they want to chase other things. They forget about the things that generate the profit and then fund the company. In case of JDSU, they forgot about their core instrumentation business, and it's been in a milk mode, harvesting profits for the longest time, and they were investing a lot of money into software applications for which they really did not much understand about software infrastructure. So the first thing was really fixing your core business, reestablishing your market leadership, and taking share and generating significant cash flow from that business, making sure that it's healthy, growing, and generating significant profit to fund potential growth initiatives. The second, you got to understand, every company has growth waves, right? And in case of Viavi, I mean, there's, I would say, three massive, I would say, super cycles, super trends. And when I say super trends, it's something that for the next 10 years will be growth, growth, and growth. And if you don't grab your unfair share, then you're gonna end up being smaller player in the industry. And the three big components for Viavi were fiber. We were the experts of fiber. We invented a lot of the technologies in fiber. And that was the market that we didn't really fund while we were chasing some sexy software stories. But fiber is going everywhere, and I'll talk about it shortly. The second part is the wireless. Viavi has always been a wireline company, copper, cable, fiber, and they never really looked at the wireless space. Well, we looked at it. Well, wireless is a much bigger and faster growing industry. And the question for us was, do we have the capabilities and talent to enter into wireless space? And it turns out we do, because when you think about cable network, it's really nothing but a wireless technology that where the wireless wave propagates and travels through a coax cable rather than through the air. So with the exception of the antennas, it's pretty much exactly the same. And we have taken those capabilities that we had within the companies and successfully entered the wireless space. And we decided to intersect it in the 5G with the transition that's happening today all over the world. And the third element is the 3D sensing technology with development of machine vision, the autonomous driving. I mean, most immediately, you know, the facial recognition technology, the type of optical technologies that we had in the company were ideally suited from being a major force in anything from facial recognition in your smartphone all the way to the vision systems in autonomous driving, robotics, and drones and things like that. So identifying these ways, so your growth, your base business is very profitable. It's growing in single digits. Then you have multiple components that are growing in double digits. The idea is you got to start reallocating your resources and shifting focus to these areas while leveraging all the base business. And of course, once you get these things fixed, then you got to focus on making smart M&A, because there are many ways a company can lose its way and waste a lot of money, and M&A is basically one of them. In fact, there's been multiple studies that most M&A ultimately fails, and the only big winner in M&A is the seller, and most buyers never get the value that they wanted. So there, you know, so the question was, what makes it for good and smart M&A, and I'll talk about it. And last but not the least, as with every business, there's a good, healthy housekeeping. You got to drive operational effectiveness. It's your productivity in operations, R&D, and SG&A. Because if you really look at our cost structure, we make very high gross margins. So our technology sells at a very high premium. We operate north of 60% gross margin. And then everything else is in, I mean, biggest chunk of our cost is not cost of goods, it's OpEx, it's engineering, it's sales, it's marketing, it's G&A. So the more efficient you become in every one of these elements, and R&D is by far the biggest, the more profitable and more successful you'll become. So that was the basic strategy we set out, and I'll talk about each of these elements. So the first one is Viavi Ecosystem, right? We have, and I don't want to scare people with a lot of different, there's a lot of pictures here, but essentially what it is, it has the hardcore instruments, which is hardware with a lot of embedded software on the bottom. These are the things that capture data, analyze data. It's very advanced instruments, and they sell from anything on the most simple product, $3,000 to $4,000 to multiple millions of dollars on the higher end. So all of these things need to be periodically re-engineered, and that's a lot of products to be re-engineered. So one of the things we did here is focus on making sure that we have only developed 3 platforms. So when you look at it today, it looks like a lot of products, but in a nutshell, it's really only 3 platforms today. And we can respin and redevelop this platform every 3 years and then roll them out and address multiple vertical markets for technicians, for construction, for contractors, and troubleshooting engineers to provide them with these instruments. As you go up, it's software. That is really where you start analyzing the data, you're capturing data, providing a lot of the network management today is highly automated. And this is the intelligence layer where we play. And the very high level, that's your software, it's your database. It's a lot of interaction with all the different IT and software systems that service providers have. So what we refocused is making sure that once all these layers horizontally and vertically work seamlessly. I mean, you know, it's a very simple concept, and when you take an Apple phone, everything works seamlessly, but it takes a lot of effort to make sure that it happens that way. 5 years ago at the JDS or Viavi, every little piece was a standalone, and actually we worked better with competitor products than we worked with our own products. So we set up on the way to really first integrate horizontally and then integrate vertically, make sure all our systems work. And I would say today we're about 70% of the way there, and it's a magical things happen. Once a customer buys into any element of your portfolio, it just becomes an easy, effortless thing for them every time they need the new solution just to buy one of these pieces from you. And before you know it, within 5 to 10 years, the switching costs are so astronomical and the life is so easy. The question is, why would you consider anything other than Viavi? So that's what we've done. It's not something anybody who tells you they can transform company in a year or two is lying. In technology space, you got to plan 1 year horizon, 3 year horizon, and 8 year horizon, or 5 to 8 year horizon. And then you got to execute, and everything has to, fit very well together. And that's what we've done. We're about, I'd say, 2/3 of the way there, and we're already seeing significant benefits emerging here. The next element is really finding the growth vehicles. And to us, really the high-speed communication is the name of the game. We saw that eventually all the copper infrastructure give way to the fiber, and the ultimate thing, the access will become largely wireless, right? Because 5G is effectively, the promise there is to give you very high-speed wireless access. But what people don't even understand, even when you look at 5G and they talk about 5G, in the end, everything connects into fiber. Today, we actually have fiber running all the way up to the antenna. And the moment your signal is received by a tower, it goes right back into fiber network. So if we look at it today, all this plethora of communication technologies you have, twisted pair, DSL, cable, fiber, enterprise, consumer, data center, it's all moving to fiber, from the very big high-speed fiber in the core, in the metro, and all the way accessing to your home. I mean, my 80-year-old mom just got a AT&T fiber, and she has a 1 gigabit in and 1 gigabit out from her home, which makes all her grandchildren jealous because she's got the best internet of everybody else. And that is the future. I mean, you're going to see every house in America in the next 10 to 15 years get at least either full or partial access to fiber. And it's even more ambitious in Europe, where countries are now driving it as a national infrastructure initiative to pass every home with fiber over the next 10 years. In fact, Britain is one of the most aggressive, and they have a goal in the next 5 years to have every house in Britain connected to fiber network. So when you look at it, and we are 40 to 50% market player in the space, it was a no-brainer that we should double down, triple down on the fiber networks and extend our presence into the RF space, because really 5G is just a continuation of fiber through the air. And you're seeing with all the, now the talk on the Capitol Hill, everybody's talking about infrastructure. One of the big elements of infrastructure is really bringing broadband to the masses. And today, unless you live in a major city, your access to broadband infrastructure is very poor. So really, where a lot of money will get spent in the next 10 years is what they call a rural broadband, but it's really bringing fiber optic speeds to tier 2 and tier 3 cities and to rural communities with the extension as a 5G wireless to really reach individual farmhouses anywhere in the US. And when that happens, then the question becomes, why live in a big city? Because you'll have a phenomenal infrastructure. So it's basically a double growth engine for us, and really was going to be driving our growth over the next 10 years. I talked about 5G. Here we bring, clearly developing 5G is a major undertaking, but what we bring to the operator, and that you got to think about how operators think. When they invest, first they did is, between Verizon and AT&T and several others, they spent close to $100 billion buying spectrum. It's a massive investment. And when they think about wireless technology, they think in a 30-year horizon. So that means you first buy spectrum, then you lay fiber network, then you build out all the sites, you qualify, you certify them, and then you monitor and optimize them. So there's this complete value chain. And we had every element of that value chain at Viavi except for wireless. And that's the last piece we developed. So then we go to the operator, we talk to them, we're going to take you from the lab to the construction, installation, operation, and optimization of your network. And everything you do will be tied nicely in one bundle. And it's a very compelling proposition. But it only works if all your pieces talk to each other and work with each other, and you truly walk the walk and talk the talk. And I'd say we're probably about 80% of the way there, but it is a huge thing in the industry that is highly fragmented, and everybody provides one little piece, and then somebody spends billions of dollars trying to optimize and integrate it. And we are very bullish that this is going to be the element that's going to build the next $1 billion of revenue for us. And here's all the instruments that go into each piece. And last but not the least is 3D sensing. We have a very innovative optical technology. I mean, and one of the coolest and I think one of the biggest growth stories in the next 10 years will be emergence of this whole machine vision, because you cannot have intelligent driving cars or smartphones if they don't take the world pictures and understand what's happening and analyze it. You can have the best supercomputer, the best AI, but you still need to take the data from outside. You have to scan it and bring it in, and then it gets processed. And with our optical technology and our IP portfolio, we are the undisputed leader for the advanced optics on both the optical diffusers and optical filters that process the information and deliver only the high level of signal that goes into the optical sensors and all the analytics. So I'm not gonna, it gets very technical, so I'm just gonna leave it at that. Think of it this way: is having eyes with 20/20 vision in 360-degree direction. And the thing that starts with most important on that thing is first starts with the lens, and that's the technology that Viavi provides. So with that, we have a very good transformational operational story. We have a very good growth story leveraging internal capabilities, but you always have opportunities to accelerate by doing things smartly. And this is a basic framework that I've used over the last 20 years to avoid making big mistakes. I've learned about all the bad acquisitions when I was at Boston Consulting Group, and we saw disasters that many companies did when you try to integrate and realize synergies. And what I found out, that things that are really a no-brainer and low risk is when you make an M&A, what I call go deep. There's two ways you can do M&A. There's a go wide and go deep. What's the difference here? Well, when you go deep, you're buying businesses very much in the same stable as your current businesses. So you're effectively getting a lot of operational scale and operational leverage. And you're buying businesses in a business which you know and understand, and you know how to extract the synergies and how to extract the both revenue and cost synergies. And usually these acquisitions are highly successful, and they bring significant impact. Now, the other axis is called go wide, and that's where you just diversify and you buy businesses for the sake of adding more revenue to your bottom line. Well, the thing that magically works, and there's this economies of scale that everybody talks, it's a log scale. One is the unit cost, and x-axis is the doubling of revenue. And it's usually, there's a scale curve, and it's a famous BCG scale curve from the 1960s. And everybody talks about scale, but scale has an ugly sister called complexity. And it's usually the curve that goes up in the opposite direction. So the trick is, as you increase your scale, you want to avoid increasing complexity. When you go wide and you make big acquisition, you actually increase complexity, because in the end, you just added more bulk. Now you need to put a lot of overhead to manage it. And it's usually where a lot of companies fail. And often, CEOs don't understand the businesses they acquired, and they don't know how to ask the right questions, and it becomes a disaster, and then everybody starts blaming each other. So when I came to Viavi, they were doing a lot of go wide acquisitions, and it was a disaster. So first thing we did is we jettisoned and shut down a lot of these things that were too far from the core, and there were 1-2% players in the industry dominated by giants. So we refocused ourselves around our core business, and then we went out and we acquired technologies that may have been a little bit go wide, but predominantly go deep. And that has given us significant operational scale and accelerated development of a lot of technologies that we wanted to introduce. So that's what we did with M&A. And I talked about the operational effectiveness. And to me, driving operational effectiveness should be like second nature in every company. It should be something you do every day. You got to get better and improve your productivity, improve your efficiencies across the company. So that's pretty much concludes my prepared remarks, and we can go to the discussion. Bob, you're on mute.
Oleg, thank you very much for that transformational presentation. I know I have a number of questions, but we have a few from the audience, so I'll start there. And sooner or later, I'll get my questions answered as well. And by the way, congratulations on your performance in 2020 and what sounds like the transformation continued success in 2021. So Shreya has a question for you. Do you have any tips on recognizing those transitions in the business field and how to take advantage of them as you have within your companies?
Well, so I mean, that's a very good point. The thing is about when you are in a particular business, you clearly see the transitions and you see the risks and you see opportunities, right? So your most intelligent is about the business you're already in, right? Now, the other things is you got to also look, but you have to also look a little bit broader. You got to zoom out because people can tend to get very myopic and they say, hey, I have the best DSL tester in the world, right? But DSL is being replaced by fiber, so it doesn't matter. So what you got to do is that you zoom out and say, hey, I'm not a supplier of test and measurement for DSL or a copper. I'm a supplier for test and measurement for broadband. The moment you define your business a little broader, all of a sudden you start seeing a lot of other trends that you normally would never recognize, like fiber, the wireless, all the threats coming from outside. And I would say you want at every level of organization, clearly, if somebody working at the engineering level, you want them to be focused and say, how can they make their individual part better? Then at your general manager, you got to really force them to think a little wider and look at the adjacencies and understand what's going on, the trends in the business. And at the CEO level, you got to have even broader picture to say, okay, is this business, is there something else coming that's going to replace it? Or is there, you talk to your customers, you see what's happening. And the nice thing about telecom business, it moves, it's as slow as molasses. I mean, what in semiconductor industry, we see I would see like within 6 months, the product gets launched and it's in revenue, and you fly or you die very quickly. In telecom, it can take 10 years. So the beauty of it in telecom space, you can adjust your strategy even. So Viavi was way screwed up, all right? But still, it was easily fixable because everything moves very slowly, and with the right intervention, you can recover. But I would say the way to do it is at every level of a company, they got to have a funnel that they look at, think of it as a telescope, but the higher you are, the broader view you have to take. Clearly, your engineers need to focus on what they are doing, but as you go up in levels, they need to take broader and broader view to detect the trends. And you got to constantly bring in third parties, challenge the conventional wisdom in every company. But also you got to be pragmatic because often, this company, this technology will get replaced. This is the new, we got to go there completely. Well, the change can take decades and you could make a lot of money, but you can also lose your predominant position with a lot of profits by focusing on a new shiny objects and, spending a fortune and totally neglecting your core business. And that was a big problem for Viavi. For a decade, they were siphoning money from the core business to fund something they thought was going to happen, which never happened. But in process, they lost their bread and butter.
Well, I think that's a really good point about the shiny ball syndrome. And a lot of companies, and Viavi is no different, got into the same situation. And I think Matthew poses an interesting question for you, really along those lines is, can you describe how you address the cultural shifts of the existing management team when you drive these transformations? So, how do you change the mindset from shiny ball syndrome and change the culture to drive these transformations?
So, well, I don't claim to have the golden formula to do it. I'll tell you what works for me and what I've done in every company that I've been to. So when you come in, there's already a team there, right? And what you always realize, what a lot of people fail to understand, a lot of these people are very talented and very smart, but they, like everybody, they respond to certain stimulus and certain incentives. So you got to take care and assess. And I usually look at it and I say, well, there's probably 20% of these people have to go, because they will never have what you need. First of all, once you have your strategy, you know what you want to go. There's some people who will never be able to step up and do it. And those, you got to take them out, give them a good package, let them go find something better to do. Then there is a big lion's share of group, I'd say probably 60 or so percent within the company that you just need to, they need to see a new direction, understand new strategy, new goals, and start thinking differently. Because the benefit they bring is a tribal knowledge, and other things, the question is, can they be taught? Can they be molded in the new direction? And then you always got to bring in, maybe I'd say about 20% of people from outside, because to drive change, CEO cannot be everywhere. You need to have at some critical junctures people whose capabilities and who will drive the change. Because I've seen many companies, the strategy and change dies below the CEO. Everybody says yes, yes, but everybody underneath keeps doing. So you gotta put different people at different levels to drive the change. And it's worked very well. I mean, some of my best managers are people who were always here. But they will do what the boss tells them to do, or and they just blindly go. And I always tell people, if all of a sudden you change the rules, things could go back just as quickly in the other direction. So you gotta always, and avoid drinking your own Kool-Aid, because point is, being a CEO, most people will always agree with you. And the only person, you want to have people who are openly disagree with you and challenge you. And it takes a very comfortable people, because I've known many CEOs who just do not tolerate any dissent, and that's usually a fatal flaw. But you want to have, but it also means people need to know that they can bring things up, they can disagree, and there's no punishment. You have an open dialogue, and you can have dialogue, but also sometimes you say, hey, fine, I heard it all, we decided we're doing it this way. End of conversation, and everybody has to execute. So from my perspective, that's how you drive. And most importantly, you got to walk, you talk the talk and you got to walk the walk, because everybody will see a fraud very quickly if you're saying one thing and doing something else. And it's got to be very transparent, top down. And that's really, the culture really starts with the CEO, because you got to walk the walk that you talk the talk. And you got to also assess your executive team and make changes. And then you force them to do the same thing one level down. And that's usually starts the ball moving.
Oleg, along those lines, when you talk about the people transformation, some might have to go, some you want to stay in, some you want to bring in new. I think there's a generally accepted principle that there's a war for talent out there, and especially in the field of technology, there's a war for talent. How does that impact the transformation in finding that talent and retaining that talent to achieve your goals? Well,
so it's an interesting, very, very good question. So our headquarters, when the company split, was in the Silicon Valley. And the reality is, Viavi only had about 80 people here, because it was only G&A. It was a headquarters, because actually most of my engineering is outside of Silicon Valley. But our sister company, Lumentum, they're in the semiconductor space. They were almost all here. And the problem is, there is always war for talent. So first of all, the talent, you want to give them something exciting to work on. Nobody wants to work on boring stuff, right? The second, they got to feel, success attracts the best people. And then you always got to look at it. Well, there's some talent, you got to be also careful, because, if you have too much talent, it will destroy the company, because talent usually comes with big egos. So you got to have the right talent, which drives it. But you also remember, 80% of the people have to be very good. They don't have to be brilliant to execute and make the product work. So you have to, there's a risk of having too much star talent. What you want is a lot of very good talent, the broad break, and you got to have some very critical, brilliance talent. And you got to manage it appropriately, because usually brilliance does not play very well with the rest of the company, and they can self-destruct. So it's you know, our view is it's really CEO's job. Number one challenge is how do you keep your stars happy without disenfranchising rank and file, but you also have to purge really non-performance because they are very toxic. Because people will see, you know, they'll look at if somebody when you have somebody who is really good, people can be forgiving, and they will say, okay, this person is a jerk, but boy, they really know their stuff, will work around him. But when you see somebody who is non-performance toxic and you don't move them out, that is actually a much bigger threat. So, you know, I don't think there is like a magic talent. I keep learning every time, how do you manage it? But I find you gotta have a mix of solid executioners. You gotta have your stars. And then, you know, I would say probably no more than 10-15% are truly brilliant, you know, the stars. And then you have really about 85% very good, solid individuals, because that's who really makes the company work and moves things forward. When you get too much of the star talent, they start, you know, colliding, and you start having a lot of drama that is not conducive.
Great point. So we need the visionaries, and we need the people able to execute as well.
And they're always really valuable. You got to compensate them appropriately, so you don't have multiple classes they feel they're not doing. Clearly, you got to do a little bit more for the star power, because you got to retain them, because especially in Silicon Valley, it's a very mercenary environment. People come and go, but we are blessed with a phenomenal engineering teams in France, in Germany, in UK. You know, Silicon Valley does not have a lack on talent. We got a lot of great engineers everywhere. You just have to find them, train them, and attract them. And today, actually, a lot of people do not want to live in Silicon Valley because of a cost-prohibitive nature of the place.
Excellent. A couple of questions from our audience. Lori asks, when determining the strategy that you want to take your company in, and which business units to further invest in, and which perhaps to reduce investments, how do you also factor in the current competitive landscape? Is it worth doing a full SWOT analysis?
You know, I spent 8 years in Boston Consulting Group. So, you know, it was a very good experience for me, but I also saw analysis by paralysis, okay? I've seen companies spend massive SWOT analysis, and these big binders, they go on the shelf and nobody ever touches them, right? And the problem you have, people know when there is a problem. It's, you get your senior execs, because, you know, collective wisdom of 10, 20 seasoned executives in a room, and some of the young Turks, and, you know, people who will disagree, you generally know the problem. So, I mean, my experience has been, it's 10% inspiration and 90% perspiration. It doesn't take that long to understand the problem and what you do. You will never know the perfect thing. It's not a surgery. You know, you may overcut it or undercut it. You can always adjust later, right? But the biggest threat is inaction. People often use the SWOT analysis to kick the proverbial can down the road because they don't want to deal with this thing. They want to do more analysis. They want to have more meetings, and nothing happens. And my view is get it going. And if you see something is wrong, you can always change the course. Nothing wrong with it. But not doing anything is probably the single worst thing you can do. And generally, you know, there is no precise formula how much you should allocate. You generally know, okay, I need to spend more here. I need to spend less here. What can we do? Let's look at the plans. And then you do your annual plan. Okay, this year we're going to shift this much money from here to here. Next year, let's reassess and make a decision later. But you got to start making changes, and then you see if things are going in the right direction or not. But I see way too many companies want to have too many meetings, bring in too many people. And remember, it's human nature. People do not like change. And everybody has, there's always people who have a vested interest in status quo for personal reasons or not. And in the end, you know, you want your execs making hard decisions, making change, and stand by it. And if it's wrong, okay, make a course correction and no problem. You know, I want one of the core values. So I have about half a dozen core values that I put in the company. And one of them is informed risk taking. Make a change. And if it doesn't work, make a change again, but not doing anything is not excusable.
Well, like I worked for a company that was really good at opening projects, but really bad at closing them. And I think that's what you're touching on too, is we just can't seem to let go sometimes, right?
Well, because listen, people have budgets, they have departments, they have personal power. What do? So what you got to do is you tell these people, listen, your job is safe. We'll have to do something else, but we're not going to be wasting time on throwing more money after that, And that's, I mean, it's once people see that this is the change is okay and it's not a threat, people become more open-minded. But if every time you make a change, you get rid of a whole swath of people started worrying about change. You got to make sure change is the part of every daily routine is how they think about their business.
That's such a good point. LaDon has an interesting question. Can you talk about your personal transformation?
Oh, LaDon, she's being mean to me. All right. Well, personal transformation. Well, I wish I was born with all that wisdom. I mean, let's put it this way. When I was at BCG, I was not known as the customer-friendly consultant. It was career-limiting move in many ways for me because I just did not put up with BS. And I would just tell CEO, well, you're flat out wrong. I mean, I know I will make a lot more money agreeing with you and then have a big transformation, but it's a waste of my time in that. So I learned very quickly that I'd rather do things than consult. But also I'd say over time, as you get older, you get wiser. You don't take as hard of positions. You become more balanced, and you start viewing other people's point of view maybe with more sympathy. But I'd say that's probably the only transformation. But I'd say in many cases, my fundamentals are very much the same way as they were when I was 20. I'm just much better at attenuating the impulses and being more, although most people may disagree with me, but I think they haven't seen me when I was in my 20s. So I'm kinder, gentler version today. That's what you learn after all the years in the industry. And then you also learn that, hey, even sometimes when you think you were brilliant and it was great, things just don't work. And, you eat a humble pie. So you become more reflective as to, well, you take a bit more time to think through things before you make changes.
Well, I think it's fantastic that you were able to look inward and recognize that. Did you have mentors or leaders that particularly you looked up to, or leadership philosophies or books that you read? What along those lines kind of helped you along this transformation?
Well, I tell you, I was blessed with having a lot of great people that I worked with that I learned from. My motto in life, and that's where I drill down in every company I've run, is copy with pride. If you see something that's really good and something that works and you wish you could do it, just copy it. Adapt these things yourselves. And I mean, I tell you, I'd say my 8 years at BCG were the most interesting, because I think your learning curve in consulting, you learned about, I think, 7-to-1 rate. So after 8 years, I tell everybody I was, I had north of 50 years of experience, even though I only spent for 8. But you also, I was blessed with working with a lot of great companies where I could see executives. And I said, wow, these guys are not as smart as the partners at BCG, but holy cow, look how successful they are. Their things work. And then on the other hand, I saw some brilliant people in consulting. I said, I would not let this guy even run my smallest product line, because it's just a different set of skills. So I would say from observation, you observe people who bring different skill set, work differently, yet they're very effective. And you learn to respect different styles. I mean, I don't think anybody on my executive staff is just like me. I mean, they're all very different individuals, but it's a trick is, I would say part of it is recognize that certain styles work very well in different situations. And you need to have that diversity of, thinking, thought processing, how people work, how they perform, how they approach a problem, how they execute. And, in the end, they all get to the same great result. And it's just, for me was I've adopted some of the certain traits. I've seen somebody has done things a certain way. I say, well, that's effective. It's better than what I'm doing. But it means always learning. I mean, they say you live a century, you learn a century. Just be not afraid to always see something that you like that somebody's doing better than you and just copy it with pride. So, I mean, there's a lot of books, but they're all the same. But, I'm not much on reading self-help books and all that, because I think there's much better examples right around you. You don't need to go read I mean, there's a lot of great books. I mean, don't get me wrong, and they are quite good. But just by looking around, people in your industry, you see who are very successful, and you also see people who are flawed. You say, well, I don't want to have that, so maybe I should be mindful of that behavior or trait, but these things I really should adopt and make it my own. So you constantly gotta, I call it the borrowing DNA, and that's basically the definition of evolution. You swap out different parts of your DNA and adopt others, and that becomes the new product.
I like that. I like that a lot. Oleg, you've certainly demonstrated in your presentation and our discussion about how you've addressed resiliency, resourcefulness, responsibility, and reinvention with yourself and with your companies. Before we end our time together today, I'm curious as to tapping your thoughts about the vision for technology. Where are we headed? What are some things that you're thinking about in the future, be that leadership, be it technology advancements that, some people say, is that keeping you up at night? But my belief is, what's that vision for that things that you're thinking about that our audience should be aware of too?
Well, I mean, one thing I say about technology, be careful about all the pundits telling you what it's going to look like. If I go back 20 years ago, every prediction turned out to be wrong. All right. And the things that now there's some things, I mean, there is always, you should think about all this technology and trends as options. Any one of them can happen. But you always got to think about it. Well, what are you doing today? What is the most likely going to happen to the technology in space where you're playing? And if any of these options materialize, what could happen for you? So at least you keep an eye on it and you can adapt to it as things start happening. But I view as, technology, it truly is a global industry. The U.S. no longer has lack on talent. In fact, many countries are doing things better in educational system than we do. And I mean, I would caution people from thinking, hey, we can, to make ourselves feel better, we're going to do this or that in technology. Because all you're going to do is you're going to lose. Because in the end, technology is driven by best and brightest. And the unique formula that was the Silicon Valley, this whole combination of academia and industry, is now have been so copied everywhere in the world. You're getting a lot of great innovation. And we see it. We see competitors coming up everywhere. I mean, so far, we are probably, US is still one of the most attractive places for people to work and enjoy the fruits of their labor. But it's happening everywhere. And and you got to think about technology as a global space. You got to think about your company as a global company. And, and you always, as you said, last but not the least, get your talent everywhere you can get their hands on. And don't think that it's only in one area, which is Silicon Valley. And we're finding phenomenal people all over Europe, in Asia, in South America. I mean, it's, there's smart people everywhere.
Oleg, Raphael is going to ask our last question of the session today. What was your biggest failure in your career and how did you overcome it?
Well, let's put it this way. I quickly realized I was not going to make a BCG partner because I was told, although I was great in consulting, I was told, listen, if you want to be a partner, you got to do this long implementation projects, and you got to, agree with sometimes the, stupid CEOs to do what they want. And it was a bummer because I very much enjoyed what I was doing, but I wasn't going to sacrifice my principles. So I said, okay. And at that time I was 34 years old. I said, my God, I'm getting old. What do I want to do? Well, it was a relative. And I said, you know what? there's nothing wrong with it and changing career at 34, because I could easily do much more exciting things. And I think for me, it was like I could be miserable in doing consulting because it was very attractive place. You were paid a lot of money and you had to take a pay cut going back in the industry. But I thought, you know what? I think I'll do better in the long term here than I would do in consulting. So I would say the biggest thing is you acknowledge that, well, it ain't going to happen as much as you like it. And then you say, well, it's a sunk cost. Let's focus on the future. And the moment you make the switch in your brain, all of a sudden you realize there's a lot of new options for you. And then you just embrace it. You never look back. And my point here is don't be afraid of change, not only personal business, but also personal, and make a complete pivot in your career if you feel you're not happy or you're not getting fulfilled. And then go from there. Because once you jettison all that sunk cost, then you realize that there's a lot more exciting opportunities out there.
Oleg, I think thank you for your honesty, your transparency. After listening to you talk today, I can see why Viavi is on the road to a huge success in the future under your leadership. It's been my pleasure moderating with you today, and I'll turn this back over to Margaret.
Thank you so much, both of you. A great presentation and discussion. Really enjoyed learning more about you, and the experiences that you've had were very rich. And my thanks comes to you, not just from myself, but on behalf of Dean Lay's entire lifelong learning team. So much gratitude also to a fantastic audience who was enhancing the discussion with great questions and some feedback over on the chat. I just wanted to remind everyone who's listening that the RBS Signature Leadership Series takes place on Thursdays at noon Eastern, and that's specifically the second Thursdays of each month. For more information, you can always visit our webpage. This is long, but we'll email it to anyone who has registered: business.rutgers.edu/alumni/lifelong-learning. And we always have an exciting schedule of topics and presenters lined up several months in advance for you. And that's thanks to wonderful suggestions from our audience. We appreciate that, and we encourage you to keep sharing those great ideas. We want the series to continue to meet your needs, so please stay online briefly for just a moment longer as today's webinar ends, because you'll immediately see a survey about today's event. And one of the questions is a free-form field that you can type in topics and/or speakers you'd like to see featured in our future webinars. I mentioned this at the beginning, but I'll mention it again. A link to the archived recording of the presentation will be shared via social media and emailed to those who registered. And it'll also appear on the Business Insights page of our website. So that is all for now. Another thanks to you, Oleg. Thanks to you, Bob, and thanks to our fantastic audience. Take care and have a great day, everyone.